Hello traders, today is the 6th of January. My name is Neville Hornsey, market analyst YouTrading, and today I'll be taking a look at trading with the central banks. Okay, so there's been a lot of talk about the Fed raising rates sometime this year. And here I've just sort of labeled up a bit of a brief history of rate changes from the Fed and the Bank of England. Obviously, in December, we had a 15 basis points rate hike from the Bank of England. So that's taken us up to 0.25%. And that just happens to be the same sort of level that the Fed are targeting at the moment. So for me, currently, obviously, the Bank of England are in a rate hike cycle. They may raise rates later on this year as well. So, it could be a case of the Bank of England and the Fed cancel each other out unless one is more aggressive. And in the past, there has been a more aggressive stance from the US. So if we look back to around 2007, the Fed was at 5.25%. Come the end of 2007, they had reduced their Fed rate down to 4.25%. Then we obviously had the GFC, and central banks were trying to adjust their currencies to support their economies. So the Fed, obviously by September 2008, had dropped, by quite a big margin down to 2%, and then even larger margin by the end of December 2008, they'd gone to less than 0.25% and effectively taken the rates towards zero. The Bank of England were a bit slower on the uptake in terms of reducing their rates, and come December 2008, they were at 2%, and then dropped by 1.5% down here in March 2009, which was essentially the bottom of the decline in that move for the pound. So with the pound being at 0.5% and the dollar at 0.25% or less, the pound was actually relatively stronger than the US dollar. And you can see here that for quite a while, prices didn't go up or down really much, sort of traded within this range. This low here from 2009, the sort of start of 2009, became more important as we look to 2016. So obviously we come to Brexit. Britain's a bit more precarious because of Brexit, and the Bank of England dropped their rate down to 0.25% to try and again support their economy. And here you can see that the Fed was also targeting just under 0.5%. So for a while, the US dollar was stronger than the pound in terms of interest rates, but obviously the uncertainty around Brexit and the economic fallout was making the pound drop. But then, things change. And then we see here that I've marked up in the solid green arrow, the Bank of England, once the pound versus the US dollar got back to this level we saw sort of print in 2009 and then get tested in August 2016, they decided that the pound and the British economy could do with a rate hike. So they raised their rates. But then a little while later, in these blue arrows here, you can see that the Fed were also doing a rate hike cycle. So again, the pound and the US dollar sort of cancelled each other out, and we went in a sideways range until we got to March 2020. So obviously, coronavirus hits, massive economic fallout after that because of the shutdowns. And essentially, the Bank of England and the Fed did what they could to support the economies. So they, again, dropped their rates. And it wasn't until the stimulus came in from the sort of fiscal side, from the governments, that we actually saw the pound and the indices and things like that, the more risky sort of securities rise. And that's obviously been well documented now. But obviously, we're back at this level for the British pound versus US dollar, and the economic outlook looks good. Inflation's rising, employment's rising. So the Bank of England, again, at this level that we saw 2009, have decided to intervene in the markets, and they've pushed the Bank of England's bank rate by 15 basis points up to this 0.25%. So from now on, we don't really know what's going to happen. We just are predicting that the Bank of England probably going to be raising rates, but they're not as quick to change rates as the Fed. And if we go to the worldwide interest rates and look down the list here, Japan's Bank of Japan set their rate at minus 0.1%, and they haven't changed it since 2016. So I'll be looking to trade against the yen because, as the Bank of England, as the United States Fed move their rates, it looks like the Bank of Japan are going to keep theirs obviously pinned below zero, as is the euro. And but obviously there's more of a differential between the yen and everything else. So if we look to the British pound versus the yen, so GBP, JPY, we can see here that since 2020, the pound's been rising against the yen. So that's one trend to look for. So looking to the upside. If we go to more of a daily chart, now things become a little bit easier to trade because if we come to this date in history, so the 4th of November, 2021, so last year, I put a red arrow here and you can see that the pound dropped quite heavily against the yen. And if I go to economic calendar and go to November the 4th, 2021, you can see here official bank rate 0.10%, the same as forecast and the same as the previous. And if you look down through the news headlines, you say the pound rightly sinks lower this week as the Bank of England defies rates market expectations. So, just looking at a little brief history of what was going on at this time, the market had been predicting a rate hike and they didn't get it. So they sold off the pound, regardless of what the Bank of Japan haven't done. Then we come back down here, December the 16th, 2021. And we look through the calendar. So here we go. And we've got expectations of 0.1%. And then they actually surprised the markets with a 15 basis point rate hike up to 0.25%. And if we go back to here, so we had this sort of bullish move, which unfortunately went straight into old market structure. So here you can see we hit old support, that became resistance, came back down into the sort of late December. And then since then, we've just been riding a lot higher. So the overall sort of theme is the pound, Bank of England rate hike moving higher. This is what happened when the expectations were for that to happen earlier in the sort of last year. This is what happens when the market gets disappointed by the Bank of England. And this is what happens when they get what they expected. So now I'm thinking, at least against the yen, the pound is due to sort of keep rising. We just need to sort of take out this swing high here to sort of confirm that we're in a bullish trend. If we look back through history, start of 2021 was good for the pound, kind of went sideways against the yen for a while. And so if we were to break out above this significant swing high from October 2021, that is then a breakout of this sort of bull flag pattern or a continuation of the trend from 2021. So with that in mind, you can go down to a 30-minute chart. And late last year, I was sort of saying that, you should be looking for longs, and, you could use the overnight session range. So here we've got the highs and lows of an overnight session. And then I sort of found this on the chart. So from 30th of December, I said go long. It just so happens that if you were risking one and looking to make two on every pound that you make, sort of like yesterday, that target would have been hit. So hence why I'm looking at the pound yen again. We just had the obviously overnight session here, and a little breakdown into that daily sort of zone that I'd marked up before from when the Bank of England disappointed the markets. That held. I'm looking to see if we can get out above this overnight session range, and then obviously above this swing high here. And then, looking to go long again. So that's how you can look to trade with the banks, with the central banks. You can look for the interest rate differential, buy the strength, sell the weakness. So ultimately, if you can find a decent entry and sentiments on your side, then going long against any of these currencies pairs versus the yen seems to be a good move at the moment. I hope that makes sense, and I'll speak to you again tomorrow.